Hello traders, welcome back. Today is the 9th of February. My name is Neville Hornsey, market and actually trading. And today I'll be taking a look at the S&P 500. Okay, before we get into the charts, going to look at the YouTrading.com forex heat map. We see that the US dollar is the weakest, and we've currently got flows into the Aussie and the Kiwi. So more of a risk on day today, though generally the market is mixed. We can see that the yen is weakening, but the Swiss franc hasn't really. We've got moves into the pound and out to the euro at the moment. So currently I'm looking for this commodity sort of move to build, and then that to support equities. Looking at an economic calendar, we've got the high impact data here. With 3 p.m. GMT, we've got US wholesales, then we've got US EIA, and then we've got these Fed speakers. So until the Fed speakers are done, I don't think a lot's going to really happen in the sort of start of the US session. And then to sort of cap it off, we've got at 6 p.m. GMT, this benchmark 10-year note auction. In the past, I'll show on the charts that the S&P 500 hasn't really done much after that auction. So I'm not saying it's going to be market moving. I just think this market's not going to move until all that data is out of the way, and we've got US CPI tomorrow to think about as well. So wherever we are tomorrow in terms of support and resistance, I think that would be crucial for the direction that this market takes after the US CPI tomorrow. So in terms of where we are, 4,558 currently on this chart. All-time high is at 4,816. So 200 to 300 points away from the all-time high. We took out a significant low here. So the 30th of September, this low here, 4,270, that was swept on the 24th of January. And since then, we've been making more of a bullish move. The 200 period EMA has acted as some sort of support in terms of the market didn't really want to sort of spend too long below it. When we dipped for the final time on the 28th of January, it came back down to this significant low here and then closed back above the 200 EMA, signaling that the buyers were fully in control and that we were going to go and test some other areas. Those areas include this sort of volume void here, and we've got another one up here. So assuming that the 50 has done its job of acting as dynamic resistance for the first time of asking, there's now some stops above there. That liquidity will give way if we're testing it. And I'm thinking the 4,600 to 4,650 sort of area, this sort of gray zone gets tested around CPI tomorrow. Now, depending on what happens in the US CPI data, expectations are for it not to be increasing as fast as it has been, but still increasing. So 0.618 comes in at 4,590. So that's that swing high that rejected last time on the 2nd of February. The 786 retracement is in the middle of this sort of big bearish candle. So, if we're going to get through the 618 tomorrow, take out the swing high, and then get through this zone here above 4,600, then maybe we start making our ways up to the 78.6 retracement and the 4,680 sort of level. If the market is feeling rather bullish, then we might even test up through the 4,720 and then towards the all-time highs. I just think with the market as it is, we have taken out a significant swing low. We did have a big bearish move down. This could be a bear market rally still, even though we are making higher highs and higher swing lows. Depending on what happens next in terms of the CPI, I think is crucial. So today, I'm not expecting big moves. I just think we need to be aware that there is some resistance ahead, and this market is still, whilst it's in this range from the all-time highs down to this 24th of January low, it's still not very, very bullish. Once the 20 gets back above the 50 and everything's pointing normally, like we had back in these sort of days, then we can start looking for buy the dip off the 50 EMA. But at the moment, I think we could roll over just as easy as we can go higher, and I don't really want to be trading in the middle of the range. If you are going to trade, probably best to do it on the sort of intraday timeframes, looking for support and resistance. So here you can see we had the sort of classic three candle pattern rejection. So we made a swing low on this significant low, 4,270. This big green push up off that low sort of signified that the bulls had, really sort of stepped in. We didn't take out any decent swing highs until this moment here. So 26th of January, a couple of days later, took out a swing high, then retraced back just to sort of find this significant swing low acting as support again. And then this whole period just became an accumulation phase. They moved up higher impulsively, which is great, stair-stepping higher. Then a shallow correction back down to that swing high. That acted as resistance before, now as support. So we've got a good base around 4,450. And now we're going to see if we can take out the liquidity above these swing highs here. If we were to get through this volume sort of void here, then 4,650 clears, and then you can sort of see where the next set of stops are going to be, all the way up through to 4,750. So for now, if you're going to buy the dip intraday, what you need to see is a significant swing high get taken, then a pullback into these EMAs, and then a rejection of those EMAs for the next push higher. That would look something like this, where you take out a swing high there, go with my arrow. So we want to see a push above that, come back down into the moving averages, which would have by then moved higher, see a rejection, some sort of pin bar or hammer, however you want to call it, and then a move higher into this block and above. Okay, so that's what I'm thinking for now. But then obviously, if you go back to the daily chart, you don't really want to be trading too late into the evening tonight, especially when you've got US CPI tomorrow. Might be best to come back on tomorrow after the CPI data's out, and then just sort of see where we are in terms of these sort of areas here. I mean, 4,700 looks very tempting to get to. I just don't think it's wise to do it just yet. All right, I hope that makes sense, and I'll speak to you again tomorrow.